Assalamu alaikum dear friends, welcome back to another lesson video and hopefully you are liking my the video series. In today's video we are going to learning about the trend indicators and the moving averages. Now the moving averages are the one of the most important, basically the vital, we can say that the vital trading. Now it's necessary the whole grail, and it's no whole grail in the trading, but indicators you are gonna discuss about in today, but tomorrow it's maybe giving you some kind of an advantage. And I've been personally been trading for many years, and I keep coming back to primarily I'm a price action trader, and the moving average is one of those things that I have been found that they help a lot, just to frame the market, show me where I am at. And now if you haven't watched the last episode on the trends, that was one of the most critical topics. You probably watch to this video the whole series. Please go back and watch that recommended watching videos from the beginning. So hopefully you liking my videos, and the critical topics maybe you will find it much useful for, and I recommend you for watching all the episode from the beginning, just so you can be a really good understanding of where you are at. But the trend episode will help the most today. And we are talking about the moving averages, which is a kind of, guys, please leave a big thumb, and it helps us a lot, and subscribe to the channel for the more, and also share the series with your friends and leave a nice comment. Always appreciate it, and you guys have been loving the series so far. We are going to keep you up plenty more episodes. So let's get into what a moving average is. Moving averages is an indicator that's very common, and it's probably you have heard, even you really don't know everything about the trading, you probably heard of moving averages. It's actually very simple, and it works on a moving averages. It's today we are going to discuss about that. It's maybe you can indicators that is calculated using a past few days or the months or hours, depending on what the time frame is. So the best way for the kind of think about this, let's say we are on the daily chart every day. You have a new candle printed, and now across however many days you are going to an average of a price. So if the prices move to upside, then there will be a moving averages which show and reflects that. And this is, for example, if you have 200 period moving average, that would be the last 200 of those 200 days mixed into a moving average. So it's a simple moving average is the calculation that makes the rhythmic movements and over the specific numbers of a days in the past. Maybe a simple moving average is a calculation, it's really rhythmic in the past of the days that I have told you, and has an exponential. A moving average is a weighted average that gives greater importance to the price of a stock or the crypto in most recent days, making it an indicator that are more responsive to a new information. So we'll go into our cover today, as well as each one has its own perks and also has cons. So understanding the moving averages quickly, just so you guys know where we are at with it. And before calculating that, moving averages are calculated to identify the trend. The stock determine the resistance level. It's a trend following lagging indicator, and because it's based on the past prices. So this is the fact that its trend following indicator makes it a entirely more important than the and then ones that aren't. Again, you are really focusing on reversals, and we are looking to reversals, and you really know how get going in utilizing something like the moving averages, where it shows us that what the trend is going to look like, and what the maths is behind it and the formula. You feel free for practicing the types of the moving averages, and I am not going to believe in the maths or anything like that. We can focusing on the trading today, and I'm sure don't want a math lesson from me, but you have the simple moving averages versus exponential moving averages. So something again we'll go on the second, but you have to see here how the moving averages will work and whereas the simple moving average stay a little bit more, smooth out there. So this is because, like we have said, that moving averages hold more weighted on more recent prices action, therefore responding quicker. Now this can be good thing and a bad thing. The good thing is that you get up to date trends and very quickly. The bad thing is that you are actually more prone to fake outs, because if the price moves one way, moving averages react, that comes back to another way, the moving averages might not pick that up and you might be absolutely fine, whereas the moving average has been reacted to. So it's really up to you whether you want something that going to be so quick, or the point you're going to be very top, or you want to say something that is a bit more smoothened out and you can be a thing that's for example the moving averages you have got on the different ways of utilizing. I'm going to actually show you what does you will tell you in my favorite chart. So moving towards the BTC chart, and now we just kind of frame things. I mean, the 4-hour work nicely, as well as the beauty about the moving averages, you can use them in any of the time frame. So in the higher time frame holds maybe the higher probability the work together on the higher time frame, such as the 4-hour and the daily. We go to the indicator, that is the trading view I have been watching since the beginning. So like this, that maybe you can do this. You can go to the indicators and you can type the moving averages EMA, and you move toward the exponential moving averages. You want to click that and will give you and moving averages of exponential. So it will be on the setting, will go for the setting and we will discuss 9 in this. I think the 9 is not too fast and it doesn't really too much in my opinion, unless you are really scalping short term. My favorites are the 20th. So we'll take a look of the 20th, and again we'll do the setting and look to the 50 moving average, and I also like to look at the 200. So of course you can make whatever you like. Let's just differentiate them quickly with different colors, and I have made a little color like making a red. So making a differentiation in colors that makes the moving averages more visible. So these are the colors that I have applied. If you're not used to looking an indicator, you have got a lot on the chart and you just have a price. Now you have these lines on the chart showing you the things. Now the 20 period moving average, I'll choose the 21. 20 is going to be your quickest and exponential moving averages out of the bunch. It's going to be very much fast, very quickly. So you can see here an example of the moving averages that you can see right now. And if we hold it quite back to the moving average, and then we push away, we come to back to the moving averages, we push away backing to the moving average, pushing away, that we are broken through, and then it's a trend line over here, and again you came back and push over here right now. Wait, I'll show you in a better way. So it's very quick, and it's really don't want to be using moving averages just by themselves unless you are looking for a trend. Now in my opinion, the best way to use moving averages to just look for the trend, have a glance at quickly, and let say here you can have the daily chart. You can see, look, prices, the 20 moving averages, we are in an uptrend and you are taking the trades, and you only want to be buying. You don't want don't be shorting the market because we are in an uptrend. But this is probably the easiest way and the best way to use the moving averages. However, there is also something called the moving averages cross. Now that's where you have the multiple moving averages at the same time. As you can wait for time to cross, and you can actually have a bit more confirmation. So the lot of people are discussing about the moving averages. So the 20 showing the 50 showing a downtrend, and you can't wait for the price to return either to the 20 or 50. Again, it's not the perfect, and I'll never be on no an indicator will be, some people even have a there where you something like the 200, where you can have the longer term moving averages, and you have to wait for all of them and cross the one way or the other way for a trend to be determined. I think so. It's completely up to you, and you just utilize each one of them individually. Probably 200 is probably the most commonly used one. I would say that the 200 moving average at heart is very very basic, and it just up if the price above it, maybe if we are focusing on the 200 moving averages, the price above it, it's striking, and it's very much thinking that the 20 you can capture a downtrend right now. From here you are using the 200, we have got to wait the path of the downtrend, and we will see the path right now over here. I really do like using a mixture of them, and I'm going to using them with all the moving averages. This is the mixture, and really nicely. Most of the time I would just be looking at the 20 and other. So quickly introduce you to the maybe according to the Fibonacci, and one of those, the 13th, 15th, 13th, the 55 and 110. So changing the setting into 13, 55 and 110. These one we'll talk about the actual Fibonacci and Fibonacci retracement and stuff in the future episode. You might already be familiar with that, but I really do think that these work very well as a as a pairing, and the 15, 55, 13, 55 and the 110. We are not covering the strategies in this video. We have got strategies, they are a long way over here. So the basic first in the workout with that is really jump to the strategies. We already have some strategies on the video on my channel. So these all are, you can utilize them in the trading, and hopefully we have the moving averages with the simple moving average. When we apply the simple moving averages on an EMA, where I'll show you on the diagram how to use the simple moving averages. You can utilize them with moving averages. So we can utilize them by moving the simple moving averages, and you can use the moving averages. That's very much simple, and you can use it. I'll show you the difference. Between the exponential moving average and the simple moving average on my daily chart moving average, which is the simple. So EMA really responding to the price lot closer and falling a lot closer, whereas the simple moving average really takes time a bit more. However, you could be argued more accurate over the long time. So it's all down to the personal preference. I favor the exponential moving average just because I like to update up to date and current action price, but you work best with. Now we also have the other types of the moving averages. You can apply with them, you can have the best trading strategies over there. So making a more confirmation about the moving averages, and it's in today's video we have discussed about the moving averages in the terms. I hope you enjoyed the video, a bit of the longer one today, but it's covered pretty much all of you need to know, and moving averages, what they are and how they work. Will be going into strategies later. So don't worry, just stay tuned for more incoming content and subscribe my channel. Please leave a like button, it's very much appreciated. wait for the next video. Hopefully you are joining my Telegram channel and enjoying my free signals for basic purposes to make you educated, make you for the learning purposes. Hopefully you like my channel. Please leave a like button over there. Till then, take care. Allah Hafiz.